We are here on this amazing day. Okay everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, we are marking up DASH USD, that's dash / the United States dollar. Let's take a look at what's going on in the market. Very simple with dash. Let's mark this up so you can see and figure out what's going on. So dash started off back in April of 2017, and we see a push up, a retest, a push up, a retest, and we see a strong push up to the top. I see a pattern, see about two patterns. I want to demonstrate what I see. So this area here I'm circling is very important. So what happened here, the market came all the way up here to the top of this wick. It wasn't able to close. And the market dropped all the way back down and closed out. So once the market closed out here, this long wick is definitely an identification that the market may be turning around, but definitely losing momentum. The second candle form is a red candle. It came up it definitely came up green, and then it dropped red, closed out here, engulfed. So this candle have two things going on. Number one, it has a long red candle that lost momentum when it was green. So it was green first, came up top, lost momentum, turned around to red, closed out the bottom here. And the second part about this candle, this other pattern, is that the red bullish candle has closed out below the previous green one, which is the bulls, and the market dropped back down. So once you see this market close below, clean close as well, that means the market is going to drop. And exactly what we've seen. The market dropped, lost momentum. We got the retest here for previous areas of resistance. So basically there's something in this area here, like this. And then the market retested the resistance line, wasn't able to break, so it tried to probably attempt to go back up. Didn't happen. And the market dropped back to the previous areas of lower lows from where the market started off at. So let's take a look at what's going on in these areas. It's very simple. So the market just basically came back to lower lows. The market dipped back up high, came back down, tried to come back up to previous areas of high highs in this area. Didn't happen. Market came back down. And now the market's trying to return back to previous areas of higher highs. So it definitely did break this level. Now we have to see if the market's going to break this level here. That's where it's probably at right now, currently look like. And then it will head up to this area here and so on. Okay, so it looks like we are in some type of trend. So let's figure out the trend that we're on. We're going to erase our markups. We will be heading over to price action. So let's see if we can mark this up, figure out what's going on. So the first thing I see is that the market is in an uptrend, so we do know that. So before I even add our SR lines, I'm gonna show you guys a little few things. So we are in that uptrend. So if you go to price action and you start reading the last 2 to 4 candles, it's going to tell you what's going on in this market. So this area is very important. So let's break it down. So the last candle is showing me that it's very tiny. So it's lost momentum to the previous one. The previous one is bigger than that, and the previous one was a doji. So once we started seeing these dojis, the market's indecisive. So we didn't know if the market's going to go up or down. It got a strong green bullish candle, so the market shot up. But the thing about this market right here, it shows that we got this long wick shooting up. So the market was up here at one point. Market wasn't able to close out, came down here and closed out. So we see this long wick. So I'm going to let you guys know that when we start seeing this long wick, it may mean like this area right here may be the area of consolidation. Okay, I'm not 100% sure until we go down the time frame, but that's how it looks right now. And then we also got that confirmation for the second to last candle. That's actually look like at least less than half that size, so we can see that it's losing momentum. And the last price action candle, even though it's still active, it can grow. But at the same time, if we look at it right now and have to decide what's going on, it definitely shows that the market is losing momentum, so it could be a drop down. Okay, so right now we're gonna sit here and say we are in that uptrend. Price is respecting the uptrend. If we go down the time frame and anything changes, then we'll adjust. So what we're gonna do is let's head over to price action. Let's see what area is trying to break. So the only thing I see is trying to break is these dojis. So this doji wick here and this doji wick here is gonna break. So let's see if we can try to mark this up the best way you can. So what I'm gonna do is we're gonna grab the top of one of these doji wicks. That's our only option with something to play with in that area on this time frame. And then if we head over to the other doji wick, and let's say we grab the bottom of that and we drop that there. Oh, that's perfect. That's beautiful. You saw that doji, you saw that last price action candle, which is that doji lined up perfectly in there. So we definitely had to grab the wicks, because if I didn't, it probably wouldn't have been nothing else I can grab. So from there, let's say the market's going to go up another level. Let's take a look at how far it will probably go. So let's grab this inverted peak here, and market is losing momentum. If it does lose momentum and go down, then we'll just take this off and add an SR line at the bottom somewhere near this doji. But right now, let's keep what we have. So we do feel like we're in an uptrend. We created our SR lines through wicks this time and not through the peaks or the inverted peaks of the bodies of the candles. So we're going to head down the time frame to see how it looks. Oh, perfect. I already see what's going on. You guys probably see it too. So price is respecting our trend line. And that's what we're going to do. So we're going to add more SR lines between our three lines. And let's see how we're going to do that. We're going to change the color too so we can see the difference. Okay, so we're going to grab this peak here. Let's change the color to red. Also, we're going to grab this inverted peak here. And, we're not going to grab the inverted peak here. So we're looking price to go up, and we can work in between our blue lines, so we're not going inside. So in this area, there's really nothing else to grab. So what we're going to do is let's look down the time frame. Let's see if we can find some on the other side. Perfect. So I found another peak right here. And there's another peak right here. This is a inverted peak right here. And it looks like something here, but I don't know how tight it's going to be, so I'm going to just try it anyway. If it doesn't work out, I can always change it, but I'm going to change this color so I can know which one I put there. I'm going to change this to orange. Okay. And that's all we have to work with, so there's nothing else. But we have this big old gap here. And so now it is possible for price to break this area and go straight to this, because if we see that we do have strong bullish or bearish candles breaking through SR line to SR line, like this area here and this area here. We didn't get no pit stops with any opposite color candles for that support. So it was a clear breakthrough of green. We don't see any reds in there. And it was a clear breakthrough of red, so we don't see no greens in there. And we look down the time frame to see if we see any more of that. And clearly we can see it was a clean green, it was a clean red. So market, so what price is showing me is telling me that when price, by the time price gets to here, once it breaks out, it's going to break out all the way to the top. It may not do a pitch stop, but it possibly can. So let's say if I wanted to add something in that area, let's say if I can, find something. The only area I can see, only thing I can see I can grab in this area is these wicks. So if I had to grab the wicks, I tried to grab the wicks, I would try to grab at least 3 wicks at one time. So in this area here, I see 1, 2, 3. We see these 3 wicks and this 4th one. Because this fourth one broken straight through, I wouldn't really be able to play with that, because any SR line we create here on this area would actually just break right through. But at least these 2 candles here, these 2 wicks here, the red wick, this red candle wick and this blue candle wick is very important, because this is where price may stop at. So what we can do is we can drop and put some prices here. So let's drop 1 here and let's stretch it out, and let's grab the top of that wick right here. Okay, so just in case we have to stop at a midpoint from where, if we find that breakout down there further in the where near price action, if price breaks out, there's a chance that we can take it to the TP. If we don't feel comfortable that the market may shoot up to go all the way from the red line to the red line, we can have a halfway mark where the market price stops at the TP. We can set out TP for the orange line, and then once price come here, we wait for the breakout to take it to the next level up, or we'll see what the market does. Okay, let's head back over to price and take a look at what's going on. So we did all our markups here, so there's really nothing else to do. So what we're going to do, let's head over. So let's read the candles first. So I'm going to explain to you what I see. There's also a pattern, and this looks like it's almost about to be entry for this on this time frame if the market closes out. So I'm going to explain to you guys what I see. Basically, the market came up to higher highs. It lost momentum and it came down. When the market came down, this is the formation that we see is a double bottom, and here we go. So within this red coming all the way down is the first leg, then we have the second leg, we have the third leg, and we have that 4th leg trying to push up. So we have that 4th leg that's trying to push up, and if this last active bullish candle close above this peak right here, the market is going to go up. If not, the market can come right back down, have that retest, and then go break up to new areas or previous areas of higher highs. So basically, price is trying to return back to areas of higher highs, and we do see the double bottom. So what we're going to do is just grab our rectangle. We're going to place it around this area here. This area very important. So what we're going to grab is, we're going to grab the lowest low of price action, which would be somewhere in this area here. So we can grab that bottom wick or this area here, and we're going to grab the highest high, which would be the next area price is trying to break. We can grab the wicks of that. So let's grab the highest wick here. I'm going to draw it down to that wick there. So we know we're in a double bottom too. So once the market identifies itself in this rectangle, we can take entry to the next level. But before we do, I'd like to explain to you guys, we do trade the break and retest pattern, and I'm going to explain to you guys how we're going to do that. So if price is moving up and price is respecting our trend line, and price heads to our SR line, we will not be taking entry here. We always have to wait for the market to break our SR line. The market will come back to our SR line. We'll look for entry, and we'll take it to the next position up, and this will be our TP. Once again, we will not take entry at the SR line. We wait for price to break our SR line to come back to return to our SR line. We'll look for entry, and we'll take it to the next level up. Okay? So that's the breakout retest method. So we do know what price is going to do. We do have an idea what price is going to do. Like, it's going up. It's getting well respected. We did get that engulfing pattern. That the green candle did engulf the red, but the market didn't close out for us to take the trade. For this candle to close out, it says over here in this area, it says 2D 23H. So for this market to close out, and we may be taking that up for a buy, will be the next 2 days and 23 hours. So in total, that'd be 3 days, just about estimated. So let's go to that time frame to see if we can identify what's going on in our rectangle. Okay, there's a few things I see. So when we was on a higher time frame, it showed a double bottom, but on this time frame, it shows something totally different. I see a double bottom to a triple top to a single bottom, and the market pushed up. So here we go. Market came down from higher highs. I got a double bottom, so we see the first leg, second leg, third leg, fourth leg. After the fourth leg, we get the retest, and the market pushes up, and that's what it did. Actually pushed up to the same level, or maybe pushed up at all. It didn't really do much. So this area is really just consolidating. Okay. It's going sideways, and also what I see is this. So this is the double bottom. This area could be like a double top. So I'm gonna explain what I see. First leg, second leg, third leg, fourth leg, double bottom. Double top. Then after the double top, we'll find a retest, and that's the retest right here. And the market will go straight drop down, but it didn't. It dropped down, got a doji, was indecisive, came back up to retest, and the market then finally came back down because it couldn't break previous levels. So it looked like we got two double bottoms inside of the two double bottoms and another retest area that normally happened, but it happened with another two bottoms. Most of the time we see two double tops, one retest, and the market shoots down. Okay, so at the end of the day, now we learned something new, that you guys, we won't just see just a double top and one retest. It could be a double top and two retests. So if we see that, then there's a chance it could be a double top and three retests. So basically the market can retest as many times, but we are used to seeing two double tops in the market retests and drop down after the double top. I should say one double top and then a retest and the market shoots down. Okay, so to identify what's going on in this area, basically that's that pattern again. There we go. Maybe you guys need to put that in my comments what this pattern is right here. Maybe you guys can figure it out in my next video. Just post it. You guys can tell me what this pattern is. It the morning star, the evening star? So double bottom, single top, retest. Market came down to lower lows. We got the evening star or the morning star. And let me explain what happened. The market came down. We got a doji, so we're strong coming down, very bearish. Got a doji showing that the market's indecisive, so it's a chance that the market could have went sideways, it could have dropped down, or it could have went up, and exactly where it went up. Okay, so once we would have seen that green candle engulf the previous red one, that may not have been clear identification that the market may be going up, because the next candle was a doji. There's a chance it could have came back down, and then we had another bullish candle that engulfed the red and the green one, but it actually cleared this this bullish candle, this red candle. So definitely after this area, we could have took it for the buy and took it to previous areas of higher highs. Also, so what this market, what it tried to do, it tried to do a double bottom. So I'm gonna explain to you what it tried to do, but it did it. It shortened itself. So now it came down, it came up. That doji, which that red one I'm sitting on, it tried to come back down like this, and the market came back up. But that's kind of what it did on maybe on a lower time frame. If we keep going down, we'll probably see a double bottom in that area. But for right now, just look like a single bottom. But I'm for sure there's a double bottom in here, or some type of triple bottom. Okay, so when we see them double bottoms, triple bottoms, it shows that the market may shoot up. Okay, single bottom retest, market shot to previous areas of higher highs. So we look in price. So price cleared this area here. Okay, now price going to head up to the next level, so it's going to try to clear this area here. Once price clear this area here, it's going to head up to new previous areas of higher highs, and we can just take it one level at a time. And the only reason I say that because there's something going on in this area. Okay, this area can slow this. So this area here can slow price down because one is extremely wicky in here. So we can see these long wicks shooting up. 1, 2, 3, 4, 5, 6, and if you look at the bottom end, 7, 8, 9, 10. You know, and then plus you got to count the candle as a whole, 11, 12, 13, 14, 15. So that's about 15 candles of craziness is going on in here that the price may not break. So this area will be, I will be very cautious when market price started getting to after it breaks this higher high. So once market, if it gets to this area higher highs, then there's a chance that it may not break up to the blue line, but be cautious on the way up. Okay, so this is what the pattern the market may be doing as well. So I'm going to demonstrate. So we did get to see the single bottom, and then the market shot up. So the single bottom could be the first leg. This could be the second leg. The third leg could come back down to respect our trend line or somewhere between our support lines and then shoot up. Even though we have this level will be higher than this level, it's still a double bottom. You know, it don't have to be on the same level. It can be it can look like a single bottom. It can shoot up, and the other one can be shorting itself like this. You know, or sometimes you'll probably see I rarely see this, but I've seen it before. The price may do something like this, and then come down further, and then finally go up for that double bottom and then retest. So you have different formations of a double bottom, but you'll still see the double bottom if it happens. So with me, with us being so experienced in the market, we do have an idea that the market may do that. If it doesn't, it doesn't. We'll just still be able to take the entry, because no matter what, the market's going to identify itself here. Some type of pattern is going to identify itself here for us to take that trade. Okay. So for you guys to take to understand the patterns and to be able to take entry, what you guys are going to do is you're going to go to Google. You're going to type in Forex pattern cheat sheets. That's Forex pattern cheat sheets, and you will go to images. And you'll just review the images of the patterns. You don't have to remember the names, but it's very important that you remember what you see. And as long as you go into market knowing what you see, you guys will be able to dominate the market any way necessary. Okay? So I'm not done here. So we don't know what's going on in here. So let's see if we can head down the time frame a little more to see if we can find out what's going on near price. So we have so many time frames that we can look for entry on. Let's see if we can dial it down one more time. Okay, I don't see a pattern here. The only thing I'm seeing that the market look like it's losing momentum. It can respect this SR line and come up, or it can come down further and come up. It may not, but at the end of the day, there's no pattern that's in this time frame right here. I don't even have an idea what it's going to do, so I'm not even going to play that game of guessing. So at the end of the day, it's going to be a waiting game. It could do anything. It could do a double top, may not break, retest and drop back down, create a double bottom and come up. I don't know, but at the end of the day, the market didn't identify itself, so it's a waiting game. If we go back up the time frame, if we do see a green candle that's engulfed this red one after this red one close out, there's a chance the market will go up and can go up to new areas of higher highs. Like I said, there's no trade. I don't see any type of pattern, so it's not on that time frame. The closest pattern I see is right here in this time frame, and what I see is that the market came down first leg, second leg, third leg, fourth leg, and then that last candle engulfed the red one. Once this market closed out in the next 3 days, estimated that the market will and can go up. So we got to wait for the market to close out in 3 days. But by the time, if you stay on this weekly time frame, by the time it closes out in 3 days, by tomorrow or what's tomorrow? The next day or 2 or 3 days, by Monday or Sunday, at least by Sunday, you'll be able to see something that happens. That's like the next 3 days. Even tomorrow, you'll see the candle do more than what it is doing. But at the end of the day, is a waiting game for each and every time frame. There's no entry, you don't see no pattern, so we ain't gonna try to take no trade. We just wait. So let's put something on the table for you guys to have an idea on how to do it. So if we are looking for this trade, to take this trade, what we're gonna do is we're gonna grab our long position, and let's say market breaks out, and remember what we do, we wait for the market to come to the SR line, it breaks out, it came back and retest, we got that full confirmation, and we'll just sit right here for some type of pattern to do what it do for us to take it to the next level. So let's put our position here. So that'll be the next TP it can go to. If we had to add a stop loss, let's see if we can tighten it up. So this is one of those trades where I would keep the TP like it is. And the reason why is because if you look at the third to last candle, you see this long wick. If you see a wick like this and it's dropping this far down, the wick is longer than the body of the candle, then that means there's a chance that another candle can form and do the same thing and knock us out our trade. So I would definitely extend our SR line. I would definitely extend our SR line. I just said it again. I would definitely extend our stop loss to our SR line. Now if I want to take it further to the next one, I possibly can, but I think I'm good right here. And if I get stopped out, I'll just get stopped out, look for entry to take it back up. Also, because where market is at, and we may not be able to get too many pips out of there, but we are going to take it to our next SR line. We'll wait for our price to take it out, to get to our SR line for the TP. Once price get here, we're going to look for entry again to take it to the next area. And that's an amazing trade, everyone. Okay, that's D8SH USD dash United States dollar, and the trade is looking golden. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.